You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time once again for the Futures Options Feast. That is TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Glad to see so many of you are enjoying the journey that is Plus and Pro. You guys got an extra dose this week. Not only did we have our awesome Q&A, our pro Q&A with our short vol legend out there, Mr. Don, and as well as Blackjack Hall of Famer. I saw some of you sliding in your Blackjack questions to him there on Tuesday. You got an extra dose yesterday when Brian did a little Q&A for you folks. Maybe I think we'll put that early. You know, folks listening to the OPR feed have to wait a week. We'll put that early, I think, in the pro podcast feed, so you guys can get your hands on it now if you missed the live yesterday. So you get a whole week early for your folks out there. That's how much we like. If you want to join the party over there, listeners, you know where to go. theoptionsinsider.com/plus. If you like to get things live and in your ear holes immediately, /pro if you want all that cool exclusive talking content I was just talking about, and a whole bunch more options oddities every Friday, a whole bunch of other fun stuff. Or you can just go to theoptionsinsider.com/shop. It combines them both, and you can see exactly what they each bring to the table. So whatever intrigues you, whatever floats your boat, you can go that way. Of course, keep those questions and comments coming too. We do have to hear from all of you guys and gals out there. Let's see who we're hearing from on the old program today. I am pleased to be joined once again, doing double duty, holding down the FTSE Russell hot seat and the CME Group hot seat. He's a busy man today. Our old friend, Mr. Dan GRAMZA, the president of GRAMZA Capital Management. Dan, welcome back to TWIFO, sir. It has been too long.
Yes, it has. It's great to be with you, Mark.
All right, Dan, you know what time it is now. It is time to kick things off with the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, Mr. Dan, it's time to kick things off as we break down what's moving and shaking this week over there at CME to the light side, a.k.a. the upside, and to the dark side. Dan, where should we begin our journey this week, sir?
Well, it's a tough choice because there really is a lot going on. But I'd say let's start with the dark side.
Interesting. Not usually a dark side guy, so you're flipping the script a little bit this week, Dan. I like it. Mixing things up. An interesting week to do so. Not a ton on the dark side. There's enough to make it definitely a top five, or I should say bottom five for top 10. Bottom five or bottom 10, really. But not a ton. The big movers are on the upside. We'll get to that in a second. Now to the dark side. Of course, there is one that stands out to the dark side. Too bad Sean isn't here. His fence watch looking pretty good this week. Number 5 to the dark side. Got our old friend Class 3 Milk making it back onto our bottom 5 here. Off about 1.4%. Actually doing a little bit of paper for Class 3 Milk. Used to do around 3,000 contracts. Now 6,718 contracts on the tape. So Class 3 Milk doing a little more than it used to. Maybe. We'll see if we have time. Maybe that can make it onto our analysis this week. Number 4, it's the Nikkei denominated in the yen out there. So going out to the international equity spectrum. Off about 1.55%. Before you ask, there's no options on that. So unfortunately, can't really parse that one. Number 3, our old friend feeder cattle livestock making it back onto both the top and the bottom 5. Spoiler. Feeder cattle, number 3 to the dark side, off about 2.25%. Actually doing some decent paper this week as well. 3,600 contracts. That's far more than it used to do. So again, it's no euro dollars, but compared to history out there in the feeder cattle, that's a ton of paper. So perhaps, if we have time, perhaps you can hang our hat out there. Number 2 to the dark side is Bitcoin this week. Off 4.81%. It was number 3 in the same direction last week, off 9.61%. So rough couple of weeks out there for Bitcoin, off nearly 15%. Decent volume week for them, but that's still only 181 contracts. So decent is all relative in the world of Bitcoin options. And number 1 with a aggressive bullet to the dark side this week, Don. That's our guest from earlier this week. Dan, off 15.35%. It's lumber, listeners. And before you get all fired up and say, hey, I want to parse some lumber. I've been saying this for months. I wish we could talk lumber. 118 is even less than Bitcoin. So unfortunately, there's no paper going. You think all this action would drive something from a volume perspective in lumber, yet not so much. It's still deeply an institutional product for a variety of reasons we don't have time to get into here right now. To the light side now, it's pretty much all ags this week to the upside, listeners, and up pretty hard. Number 5, soybeans, up 7.27%. And they do some paper, 382,000 contracts already on the tape so far this week. So we can definitely check out soybeans this week. Number 4, KC wheat, up 7.6% out there. Wheat does some paper as well, not so much on the KC side. Number 3, lean hogs. Like I said, livestock all over the place to the dark side and to the upside. Lean hogs up nearly 8% this week, 7.92%. It was number 2 in the other direction last week, off nearly 10% last week. So a crazy couple of weeks for lean hogs. Corn blowing the doors off this week, up 9.53%. And corn does some paper. 737,000 contracts on the tape so far this week. So I got a feeling we're going to be heading out to corn this week. That's a ton of paper for corn. And number 1 with a bullet this week, soybean meal. Again, it's pretty much all ags out here. And you can even throw kind of livestock into that same complex out there. So it's pretty much all ags. Number 1, soybean meal, up 10.9, almost 11% this week. Number 4 in the other direction last week, off about 4.6%. Does some papers out there as well, number 58,000. So it seems like, Dan, we need to start our journey this week in ags. It's inescapable. So let's head out there first.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, let's get our hands dirty. As the man said, let's dive into ags. I know all of our ag heads will love some extended ag coverage here on the show today, but it's inescapable. You can't really not talk about it. So, Dan, there's a lot of ags lighting it up this week. Which one floats your boat? Where should we begin our journey first, sir?
Well, I think soybeans is one that it really does interest me. Soybeans, corn, wheat, they're all kind of interesting in terms of what's going on. And when we think about what's happening, our herds, when it comes to cattle, hogs, chickens, all those kind of things need to eat something. And that's where these products really come into play. With soybeans, not only do we get soybean meal that you mentioned, which is a high source of protein, but we also get bean oil, which not only do we cook with, we make cosmetics, we make mayonnaise with it. So it's got a multitude of uses. But really, it comes down to, I think, consumption of protein. And one of the places I usually look at for that is China. And China, if you look at the past year in terms of their food consumption, especially protein consumption, there's been some challenges on the meat side. And, when we hear about live cattle and that they brought product to process earlier than usual, it's because you start seeing the costs to feed those animals higher than your end product income. And so when they do that, we want to remember it takes about 2 years to get that herd back to where you were before. So it's not something we can turn on and turn off. It takes a while to get that whole process moving. But what we're seeing here is products that are consumed in that industry primarily, especially when it comes to corn. Feed corn is what we primarily look at when it comes to that product. We consume, in terms of eating, very small part of that product. About a third of it goes into making ethanol, and that varies depending on government regulations. But animal feed's the dominant thing there. So China, they need to feed those animals that they have. They're the world's largest producer and consumer of hogs, for example. And to me, that's a trend you and I have seen over the last 10 years. And it's one of the things I look at is the consumption of protein. When you look at a country as their economy develops, protein consumption, I feel, goes up because people have disposable income and they can eat better. They can eat more protein. And that's what we've seen in China. Chicken consumption up over 500% in the last few years, for example. So we're seeing that kind of element. The other elements I look at when a country develops is you see people going on holidays and vacations when they have that disposable income. So we have China increasing demand, and they need product to feed those animals. United States, Brazil, Argentina. Soybeans and corn, that's primarily where they come to shop. So depending on our dollar exchange rate and our yields that we're getting, that determine the price. So they shop our country just like we shop when we go to the store. Only it happens to be countries. And so I think the products that we're seeing here have more movement to the upside. Beans, for example, have come off. They were above $16 not that long ago, and they came off a couple dollars to about 13 and a half. I do look for follow through to the upside. I am bullish on that market because of that supply demand mixture. So corn, beans, all the products that you mentioned, I think there's room to the upside. But Mark, the thing that I also find interesting, the last 3 days, or 2 days primarily, in corn, they've been selling the highs. They're not buying it up here. So what we saw yesterday is a market that had a big rally, but no real strong follow through. Today, we went back, kissed that high, and we backed off. It's that old saying on the floor, first time up is a fade, second time's a go with. And that's the kind of behavior we're seeing here in corn. Although I'd like to see how we finish this week out, because something too, Mark. You figure on these ags that we're talking about, these grains, for example, they don't trade on Monday. Other markets are going to open up for a short session, 5 o'clock Chicago time on Sunday to noon on Monday. The grains don't trade. So people have to make a decision. How do they want to position themselves going into this weekend? And I think this should be a good barometer of what those attitudes are. So do we see corn selling off? Do we see that softness, which means people weren't that confident? Or have we gotten high enough that we're now going to see a high in that market? I believe Tuesday and Wednesday of next week will give us answers to those questions. So we're in an interesting spot with these ags. The increase in volatility, the increase in demand, and I think this upside potential is here. So on the short side, we should be cautious, and maybe there's some opportunities unfolding on the long side.
Dan, every time you come on, I learn something new. I had no idea about the demand for soybean oil from mayonnaise consumption, sir. So there you go. Adding a new...
Mark, I have to tell you, it's not something people really think about, but pick up a jar of mayonnaise and for cooking oil in China, that's a big part of where they use it for cooking oil. We do in other parts of the world too, but bean oil is used in a plethora of cosmetics and other products that we just don't normally think about.
Next time I eat mayonnaise, which isn't that often, I'm not a huge mayonnaise guy, I'm going to flip around to the back and I'm going to look for soybean oil. I'll say, ha-ha, Dan was right.
Check it out, Mark.
Dan was right. You can do the same, listeners. You can also follow along with our shows when you're not checking the mayonnaise jars there. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those are great places to go to begin your journey. If you do that, go on out to the ag drop down, then choose soybeans from the drop down, and we're going to kick things off. Like we said, soybeans up 7.25% since our last show, and a lot of paper on the tape. 384, almost 385,000 contracts on the tape now. So more paper coming into soybeans land. If you don't follow soybeans every day, the front future at about a 14.29 even right now. It's up just this week, up 9.7% just since Monday's session. So that's a big move out there in the land. A lot of mayonnaise going down out there. That's going to stay with me forever now, Dan. All right, let's keep on rolling. Where is the most of the action out here this week? Well, it was in this, let's see, where are we hanging our hat out here? November contract with about 41% of the paper this week. So 41% of that 385,000 contract listeners coming up in November. We see that a lot with the ags. They tend to aggregate around a couple of months out there. It's unlike the equities, which tends to do everything in the weeklies. Or let's say some of the other products maybe go a little bit longer term, like your crudes or indeed your metals. Ags tend to go around a certain schedule of planting and harvesting, and that's where a lot of the paper lines up. So we're out here in November, 41%. That contract of vol out there in November actually coming in this week. It was about 20.88, down about 7.25 points. That's a pretty impressive run. It was a 28 vol last week. So a lot of vol out here in the ags, but again, they're moving. So it's hard to argue it isn't warranted. Let's look here skew-wise. Last week, the puts 4.7% rich to the at-the-money vol. This week, 6.2% cheap. So the puts have been annihilated here. Interesting. And then the calls last week, 5.1% rich. This week, 6.3% rich. So the calls continuing to get bid up as we rally, and the puts getting annihilated. That's interesting. Usually, we don't see the puts get annihilated that aggressively on a rally like that. So let's see what's going on out here. In the most active contract out here this week, listeners, front futures at a 14.29. We go out to November, that future is actually a 13.94. So even shy of the 1400 handle. But it was the 1500 calls, 1500 even calls that were dominating the tape this week. 23,000 of those going up this week. The lion's share yesterday, 9,000. That was the biggest day. Followed by today, close to it, 8,800, but can't quite exceed it. Of course, the day's not over yet. We shall see. Slightly opening yesterday, so it looks like a back and forth paper. And about 3,000 on Monday, 2,000 on Tuesday. So a lot of paper on these 1500s this week, which is kind of interesting given the fact that this Nov contract still pretty far from the 1500 level. Followed by number 2 out here are what you might expect, the 1400s. They did about 16,500 contracts this week. The big day was yesterday as well. 6,400 of those. Maybe some verticals going up 1,400, 1,500, even though none of the paper lines up evenly like that. 5,000 today, 3,700 going up on Monday. Again, most of that this week was opening as well. Let's go out to the puts because these puts got pretty much annihilated this week. We saw the 1,200 puts going up 9,200 times. The big day, actually about almost 3,000 a day every day except for today. Not much going up today. And that was mostly opening. So maybe some folks opening sellers on the 1,200 put strike, followed by almost 9,000 of the 1,240 puts going up. The big day was actually today, 5,065 of those today, and about 3,000 yesterday. So could have been some opening selling action on the 1,200s and or the 1,240s. A lot of paper going up on the 1,240 puts today. So someone was crushing that put wing out there, one of these two. Let's look really quickly, see if any other trades really caught our attention. Looks like 1,320 puts here in August were also pretty active with about 7,000. Actually, the 1,600 calls in September were pretty active as well with 11,200 of those bad boys. So if you thought 1,500 was optimistic, 1,600s here in September, 11,242 on the tape, 5,200 on Monday, 5,200 on Wednesday, and the rest kind of scattered throughout the week out here. Good chunk of that opening on both Monday and Wednesday. So opening paper on the 1,600 strike in September. Interesting. So despite the fact that those are pretty far out of the money, we're seeing action on the 1,500 and 1,600 strikes here in the beans this week. Interesting. Does that mean we have more upside to come? Are folks fading it? We shall find. Let's look really quickly. I mentioned those 1,600. Let's look at the skew out here in September as well. See what that tells us. The 1,600 calls the calls in September, the call wing was 12.6% rich last week. This week, 5.4% rich. So they came in pretty aggressively. Again, we're rallying a bit, so you're going to expect some of that movement with the skew. But I have to imagine some of that was also maybe some folks overriding these 1,600s to keep crushing it out there. Either way, interesting stuff afoot out here. We could probably talk soybeans for a while here, Dan, but we should probably jump to the other ag. It's number 2 in terms of our most actives, or not, it's number 2 in terms of our movers and shakers this week to the upside with 9.53%. But when it comes to volume, it's number 1. It's the big dog. It's the Eurodollars of the ag complex. Of course, I'm talking about corn. Dan, what secret hidden nuggets do you have for us about corn? Is there also corn in mayonnaise, sir? I'm guessing no, unless it's a very weird mayonnaise.
Well, I do like corn. I don't know. You may be onto something.
Maybe it's like a southern flavor of mayonnaise that has some corn beat into it. I don't know.
Exactly. That's good. Well, corn's an interesting product because it is our largest dollar valued ag that we have. A lot of people think it would be soybeans, but actually corn can be in that $70 to $80 billion range in terms of production. Corn is the largest dollar value crop we have. Beans is number 2. Wheat's number 4. Hey, what do you think would be number 3 in terms of U.S. production of a agricultural product in the grain family? That spot goes to hay.
Hey, wow. Got these surprising nuggets for me.
I know. Well, it's a product that we don't think about. We don't trade it in a derivative market, but it is a big one out there. Let's go back to corn. Corn, as we were talking about before, is a major animal feed. That's how we use this primarily, a third again or so for ethanol production. And, what we're seeing, if you look at the results, because what we're trying to figure out is where are we in the growth cycle for corn? And when you look at this product, they look at a few variables. They say, all right, how much do we have left from last year, which is referred to as carry out? How much left over do we have? And what do we have globally? And where are we in the growth cycle for corn? Does it look healthy? Have we had enough rain? And some of the concerns I have in this part of the country, I live in the Chicago area, is have we gotten enough rain when we needed it in the growth cycle? Soybeans, the first couple of weeks in August are critical for moisture because that determines the number of flowers, which determines your yield, and it's a really big deal. Up until then, it can be kind of like a weed. Corn, on the other hand, it goes back to moisture conditions you had when you planted it, as well as temperature of the soil. So if you have super wet conditions when you plant it, the root system doesn't go very deep, which means if you don't get enough rain, that crop is going to have a difficult time growing because the root system does not go deep enough to tap into moisture. And so the issue is, where are we in this growth cycle? And I've seen some mixed results coming out, that the yield's good, the yield's not so good. So I think it's really kind of up in the air. And I just find today's price action, yesterday was a big day up in corn. And today, if you look at D's corn, we hopped above $6 and we backed off a bit. I do think there's more room to the upside, but I just think it's fascinating to see the action that we're seeing today, which is selling. And I think about the skews that you were just talking about. I love it when you do that, Mark, because it really provides such insight in terms of people's expectation. So who is it today that's selling corn? Is it somebody who just wants to take profit? Or is it somebody who now needs corn and that they're going to try to, or sell corn, a farmer, and they're going to try to lock in prices above $6? Is that what we're seeing here? And are they using options to do it? Are those numbers that you are sharing with us, are they spreads? That can have an impact here too, when we look at these numbers that we're seeing. So is it that action, or have we gotten a high in corn? And tomorrow, how do people want to go into the weekend? If we close near 560 to 570 tomorrow, that would imply that we're starting to find some sellers here, not just a little bit of profit taking. Next Tuesday and Wednesday, if indeed this is just a break where people are taking profits, we should see those buyers coming right back in. And I would look for corn to trade back towards $6 by the close of Wednesday of next week. That's what we'd want to see if we have a resilient market. And in beans, no beans, you'd want to see, if this backs off towards $13.50 tomorrow, and as we go into the weekend, you want to see $14.50 by the close of Wednesday or Thursday of next week. And that would say to us that we got some more potential to the upside. And I lean that way because I do think there's that demand and supply situation out there to support it.
Well, let's break down that situation out there in corn. Go to that same drop down, listeners. You're still in the ag. Just move on over to corn. You'll see this is the big dog. 742,000 contracts on the tape out here this week. By the way, corn having a good run just since Monday. It's up 13.33% to 601 out there in that front future. So if you just look at this week's action, corn actually is the top of our movers and shakers. Of course, we extend our report all the way to the end of last week's show, which is why that number is different. But still, a lot of movement out here in corn. So it's a big dog this week in movement, and it's the big dog this week in volume. And unlike the beans, which were out in November, corn this week is all pretty much situated about 31, almost 32% of it out here in Dees. Let's look what's going on out here in Dees. By the way, the Dees future, the front future is at 601. The Dees future, 588 and a quarter, also up 69 points this week, or nearly 13.3%. So a good run across the board for the bulls out here in corn. Dees right now, the vol 39.7, up 3.25 points. So you're threatening a 40 vol in corn. Again, this is why I've said before, people are asking us what's some good products to look at if you're dipping your toes in futures options for the first time. And we recommend usually the equity indices because that's a pretty recognizable starting point for a lot of you who are trading things like SPY and the Qs anyway. But once you get a little bit beyond, start looking at commodities, you can do worse than looking at corn. It's got volume. It's certainly got volatility. We're talking a 40 vol here in Dees and corn, where you're talking anemic. VIX right now at about a 15.5 right now. So equity vol, not really there. Ags, they're delivering on the vol front this week. Let's look at the skew and see what's going on out there in December. Last week, the puts about 0.5% rich to the at-the-money. This week, 8.6% cheap. So the puts getting hammered out here. Same thing we saw as in the beans. That's interesting. Calls, 3.6% rich last week. This week, 4.4. So the calls getting bid up. Normally, listeners, when you move to the upside, up the skew, you're going to see the calls come in a little bit. Of course, unless it's a very sharp move. And it was a sharp move this week. So you can argue some of that is playing a role here in keeping the calls elevated. But usually they would come in. And obviously we didn't see them come in. We actually saw them increase. So it's actually more of an increase when you factor that in than just the 0.8% you're seeing week to week change out here. Let's go out here and see what the most active contract was this week out here in corn land. And it looks like it was the 600s. And again, not surprising. We're through that strike, and that front future DC is closing in on it here. 600 calls, doing 20,600 contracts this week. The big day actually today, 6,300 contracts on the tape today, 5,600 yesterday, 4,000 on Monday, about 4,700 on Tuesday. Pretty much back and forth all week. The most aggressive day was Monday with about 1,500 contracts closing. The rest seemed like it was a lot of back and forth, which again makes sense. We get close to the 600 level, we kind of retreat from it a little bit. You see more paper coming in, see some paper closing out, back and forth as we're threatening this very important psychological level. Number 2 out here, looks like it's right behind it here, the 700s. So we thought 600 wasn't optimistic enough. 700's doing 18,002 contracts, listeners. The big day was yesterday, 8,000 going up yesterday, almost 5,000 on the tape today, and about 3,000 on Monday and 2,200 on Tuesday. So again, slightly biased towards opening. Yesterday, about 1,300 opening. The rest, again, kind of back and forth. So interesting stuff. If it was all one direction, we might say maybe there's some verticals or something going up here, but doesn't seem to be the case. 650 is also pretty active for number 3, 14,000 of those bad boys. But actually, I take it back. Let's go back out before we get to those. Let's go out to the 600s out here in August. They did almost 17,000 contracts as well, 16,900. 600 strike is just hot across the board. And again, that's not surprising as to why. Let's see. These did. The big day was Wednesday for these as well. Almost 9,000 on the tape on Wednesday, 3,100 of that opening, 4,800 on Tuesday, almost half, about 2,100 of that opening. Only 500 on the tape on Monday and 2,600 going up today. So 600s are hot pretty much across the board, listeners. So again, not surprising. We're breaking through or threatening that strike, depending on where you're looking on the term structure here. So seeing a lot of hot action out there. Mr. Dan, I'll leave it up to you. Should we do another ag or should we roll on out to another complex? And if so, where should we go next, sir?
Well, let's see. We've talked a bit about meat. So we got some of the grains in there. Let's go to another complex.
You're our guest today. I'll let you pick your poison. Where should we go next, sir?
Well, we were mentioning there's not much going on in lumber. But the thing that I find interesting, from an option point of view, but what's interesting about that market is it's a great example of supply and demand. We've seen it back off. We've seen it come back down about a third of the distance that it had just a few weeks ago. And it's the fact that we're getting supply back on. With this whole pandemic, people say, well, okay, we can't turn our economy on and off like a switch. And when we shut down not only our manufacturing and processing, it's all those supply lines that got shut down. And some of them just can't turn on immediately. Lumber is one of them. But we're seeing that supply coming online now, where the demand is still incredibly strong. But that supply has brought that back down. And that scenario, I think, Mark, it applies to, the indices that if we want to look at the stock market, what's happening there, or the currencies. The same issue really applies to what I think we're seeing in the stock market. If you look at the S&P, for example, versus the Russell, it's very interesting, the dynamic between those two.
Yes, you mentioned the Russell. We probably should head out there next and talk a little bit of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to Equities, the portion of the show we break it all down in the world of equities. And of course, its flip side, volatility. We actually had the Nikkei in our bottom 5 to the dark side this week. Unfortunately, there's no options to parse out there in Nikkei land. So instead, we'll head on out to the Russell 2000, which was just outside of our bottom 5 here this week in dark side movers. This has been a fascinating one. We were just talking about it. We had Brian, our options guy over there from Ally, just on the option block earlier today, and he was just talking about how he's looking at some interesting trades out there in Russell. So a lot of people out there are paying more attention to the small caps than they were, let's say, pre-election last year, when small caps really seemed to kick it into high gear. Let's set the table, as you like to do, from a vol perspective before we dive deep into the products. Coming into showtime, we had RBX, aka the VIX of the Russell 2000, at about almost a 22, a 2190. It's pretty much unched from where it was this time last week. So The question, can RVX break the 20 handle? At least for right now, the answer is no. VIX cash coming into showtime a little bit shy of the 15.5 level. 1542 actually is down about a third of a point from our last show. VVIX, aka the vol of vol, at about 107.25. And vol Q, aka the at the money vol of the NASDAQ 100, also the most recent addition to the tradable volatility product suite over there at CME. That's at about 16.5. That's up about almost 3/4 of a point from where it was this time last week. NASDAQ was selling off. It looks like it's kind of moved into the plus territory to join everything else out there today. Remember, we are in that rare environment where we're heading into a long holiday weekend here in the U.S. from an equities perspective. So expect that to play out in the vol, maybe some of that vol coming off there as a result. Right now, that VIX to RVX, so that large cap to small cap vol spread at about a 6.5. That's a little bit wider, about a third of a point wider than it was this time last week. Most of that is kind of VIX just going down. We had RVX kind of staying where it was, or not a lot of vol movement really on the RVX front. And VIX to vol Q, that is a little over a point, about almost 1.25 points. That's actually about a point wider than last show. And again, some of that action coming from VIX and actually seeing vol Q moving a little bit this week as well, which isn't usually the case. So a lot of action out there. Dan, what's been lighting up your tape out there from an overall equities perspective these days, sir?
Two markets that I find really interesting. And one, let's talk about the Russell first. Yesterday in my daily video, I mentioned that what we have here, if you look at a candle chart, for example, you have 4 days ago, you had a nice little push to the upside. And what it took us in one day to cover that range, so one up day, it's taken 4 down days to cover what we did in one up day. It's what I call a non-symmetrical pullback. It means the bias is for a move to the upside. And if we're going to see that today, because of the price action, today would be critical. Today we are seeing that. And I like what we're seeing in the Russell. You know, these are companies, I expected this index actually to be stronger sooner than what it's been. It's been struggling. It's kind of the weakest next to the Dow of the indices from my point of view. However, it's waking up. And if indeed these buyers are here that we're seeing today, I think it's important to see them put in the afterburners. We'd want to close near tomorrow. We want to close near that 2350. And if we trade above 2350, then we want to close near 80 or 90. Actually, you need to see a big move coming above 2350. And if we get that, if we get a little move above 2350, I think you and I should be cautious. I would look for a sideways to even lower move. So how we get above it and when we do it, I think it's going to be important. But I think the Russell could lead the way. And right now, the leader really has been the S&P. You know, we're seeing the other end of the spectrum. And what fascinates me about the S&P, it's how we're making these highs. You know, we've been struggling as we're getting higher. And we had some favorable numbers come out today. Jobless claims, 364,000, the lowest we've seen pre-pandemic. A U.S. factory expansion at a 1979 high. It's been down a little bit, but we're still above 50, which means we have expansion type situation, which is positive. So we're seeing demand coming back into the marketplace. The thing about the S&P is we want to remember, I think, 45% of its income comes offshore. And when people say, oh, I just trade domestically, well, chances are you got something in your portfolio that is not just domestic income only. So we have exposure there. And so I think the movement we're seeing here, I find interesting. Nothing telling us to be a seller. I am bullish on these stock indices. I think there's plenty of room to the upside. And what I also like about them is what the Fed is doing. The Fed at this point is holding the course. You know, are we going to have inflation? Yes. And it goes back to that whole supply situation. If supply is not there, demand is there. It pushes prices higher, and that can fuel inflation. As people right now, there's a lot of people unemployed, but there's a lot of people, or I should say, a lot of jobs that are out there that are not being filled. So companies are being more aggressive on pricing of those jobs, giving them bonuses to sign up, which adds pressure on wages, which can add to inflation. But in the big picture, we should see some. And our economy is not turned on, and we're not done with this doggone pandemic situation. It's improved, but we're not over. So I think the inflation that we're seeing, I think the action that we're seeing in the stock indices says something about the forward thinking of the market. I like the Fed that they're not changing their policy, nor should they. I mean, look at how the market reacted when the Fed said, hey, you know something? We may have interest rate increases in 2023. And when I hear that and I see a market react to it, the stock market goes, oh my God, they're going to change interest rates. But have they done it? No. Are they thinking about it? Possibly. It's over a year away. So when I see the stock market reacting to that, to a concern, to a possibility, to anticipation, when I hear those words in the news stories, I discount it. And I look for continued movement of the market. And I still look for that right now. So I think it's healthy. So the S&P is leading the way. The NASDAQ is stumbling a little bit last couple days. The Dow is the weakest out of all these indices. And I think the Russell is positioning itself in a catch-up type mode. In the next 4 or 5 days in that market, I think will be revealing.
Let's reveal what's going on out there in the options this week over there in FTSE Russell land. Pretty decent week, even though, like we said, it's kind of selling off a little bit right now coming into showtime. The FTSE Russell down today and down on the week, actually, ever so slightly, about 0.2% here since the start of the week at about 23.25, 23.28 actually to kick off the show. And usually we see a lot of action in the weeklies, near-dated stuff here in FTSE Russell. In fact, a lot of the action of late has been focused on, a lot of the interest has been focused around these quote-unquote small delta calls. Not exactly seeing that today. We're going out to the week 3 out here in August, and we're seeing about 26% of the paper going up there. So let's hang our hat out there. The vol, if you're wondering there, listeners, 19. We've been saying this for a while. RVX is kind of a front month measure. It's a 30-day vol indicator. It uses the VIX methodology. You get a little bit beyond that front month, and the vol has already broken the 20 handle out there in the options over there on CME for FTSE land. So will RVX catch up, or will it manage to keep that bid we're seeing in the front portion of the curve? Right now, the answer is it will not, but we'll see. Time will tell out here. In terms of the skew, last week those puts were pretty rich, 17.4% rich. This week, about the same, 17.3%. So not a lot of action on the put wing. The calls last week, 11.8% cheap. This week, 12.3% cheap. So the calls getting a little bit cheaper. The puts kind of staying the same. Not a huge change out there skew-wise this week. And where the action was, again, we've seen interest in near-dated small delta calls. The other thing we usually see a lot of interest in the options over there at CME are longer dated out-of-the-money puts. And that seems to be what we're getting here, even though I use longer dated in quotes. These options only have 50 days to go. But it's the 21.5 puts that we're doing a lot of action out there this week. Looks like actually some verticals because the numbers line up almost exactly. So it seems like we got 22.5, 21.5 verticals going up there. So you put it in a vertical context, it's a little bit less out of the money. The one that first came across our radar, a little bit more were done, were the 21.5 puts. But 22.5, 21.5 put spreads going up out here in September seem to be the order of the day, going up about 1,000 or so times out there. So that's where the action is, selling a little bit closer to the fire puts than it seemed like out of the gate here. So 22.5, 21.5 put spreads. Also some 23.40 calls are lighting it up this week, but those aren't really the small delta calls people were looking for. Let me look really quickly, see if I see any of those. Usually it was 24.5, 24.30. That seemed to be where the action was. Don't see a lot of those this week. So the answer to all of you out there who are asking, are the small delta calls still lighting it up? You got 23 halves going up in week 3s in 2 weeks. Those went up a little bit this week as well. But again, those aren't really small delta anymore. So yeah, it doesn't seem like the answer is yes. It seems like it's more 50-day out put spreads going up for size out here this week. Interesting stuff afoot out here. Speaking of interesting stuff, Dan, you know what's always interesting? It's our listeners. Let's get some of them on the board as well as we head on into the futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Let's see what you guys got on the brain. And Dan, we had an interesting question last week from one of our members, Mr. Luigi. He said, did you guys, we wanted to know our thoughts on this commodity fund called DBC. He wanted to use it as, his proxy for his equities account to use that DBC fund. We talked about it a little bit on the show last week with Russell here on the show. We weren't big fans for a variety of reasons. The issues with the roll yield that always confront these products that try to use baskets of futures to replicate underlying positions out there. There's always an issue with that. Also, some of the holdings were a little bit questionable. It seemed like it was mostly an energy fund, even though it billed itself as a broad commodity fund. You weren't really getting a lot of that broad exposure. So we had some issues with that one. We have a related question coming in this week from Alan. He wants to know, are there any commodity ETFs out there that you like that don't have the problems with roll yield that you outlined on the last show? I'll kick this off, Dan, then I'll be curious to get your thoughts. But Alan, the ones I typically recommend on this front are the easy, really. It's GLD and SLV. These are the two you probably are most familiar with. They're some of the most liquid out there. They have a very robust options market on them. And as you point out, they hold the physical. So they don't have that same issue of trying to replicate something with a basket of futures and having to rebalance it all the time and get crushed by this negative roll yield. They don't have that. They have a bunch of gold they're sitting on and a bunch of silver. It makes it a lot. You can do that with the metals. A little bit more difficult with some of these more perishable commodities. So those are usually my obvious two go-tos. But I'm curious for you, Dan, what are your thoughts? First off, if you have any thoughts you want to add to that DBC fund, if you're familiar with it, have at it. And then B, outside of that, do you have any commodity ETFs you can recommend? For a lot of our listeners are in that same boat as Alan. They have primarily equity funds. They trade maybe equity options and equities, and they want to know what they can do in those accounts, sir.
I think they're brilliant comments and thoughts. First, let's talk about the fund. Totally agree with the issues that you brought up. That is the problem with utilizing futures embedded into a fund, an ETF. I was involved in the creation of currency ETFs, and one of our options, I shouldn't use the word option, one of our choices was to embed futures into it. But I didn't want to do that, and actually my partners didn't either. We shied away from it because of that, because of what we're talking about, the roll issue. It's not really friendly that way, although I do have a product I'm working on that, not using futures to embed it, but another way to utilize an ETF to gain exposure to the derivative market. But yes, I think those observations are right on target. The tracking error can be high when you embed futures in an ETF, and the roll issue just doesn't go away. But you know something? And you took the words right out of my mouth, Mark, when you mentioned what would you look at that has exposure to a commodity in the ETF world. And I would look at GLD and SLV. I totally agree with what you said. But here's what fascinates me about those markets, and something that we steered away from in another product we're looking at trying to develop, and not using physical. Because one of the things that can happen with that kind of market, especially when it started to trade, I remember when GLD started, it seemed like such a logical thing to use the physical as opposed to derivatives in terms of design. But what was also interesting is what does it do to supply? If these products become explosive, which they both have been very successful, and they're both liquid, and they're great trading markets. But if they are, that's a lot of product that's being taken out of the marketplace. And does that have an impact on the balance of that particular market? So, especially if you look at silver. So it's an interesting I guess, balancing act that goes on there. So when you look at ETFs that are physically delivered, like we're talking about, or physically backed, like we're talking about here, that's something else I think to keep in mind is where does that product fit in to the supply, global supply of that product? Does it have an impact? And but anyways, those two would be the ones that I would pick on the metals. The other metal that's interesting is copper, and we can kick that around if you want. But anyways, those two would be the ones that I would pick as well too.
I do want to kick that around, but also we have a pretty out of left field question here, Dan, that may take up some time.
Sure.
So let's go to this one next. He's been waiting patiently for an answer for a while. This comes from Rhythmic Angel. He's written it a bunch of times in the past. He says, "Hi, Mark. If you Googled this case, you will barely find an article explaining what happened with the mechanics of this trade." I have to say, he sent us a link to an article. Maybe I should break that article down first. This is on the 20th of April. Bloomberg reported that a number of Vega traders, this is a firm, Vega, sold the May contract just before it settled at 2:30 p.m. This is in, I believe, WTI, netting massive gains. They want to know, the article says, was Vega manipulating oil futures, aka banging the close, or hedging, i.e. selling futures, given the brouhaha due to COVID-19, blah, blah, blah. There are regulations to prohibit trading that have the objective of deliberately impacting prices, thus manipulation. And they're curious, this article from Bloomberg was speculating whether this was banging on the close. And Rhythmic Angel's question about this is that he Googled this, he was reading it, he read this article, he sent it to us. He wants to know, he says, can you talk about some of the mechanics of this trade? For a small prop shop to make $500 million on a single day is unheard of, as you may agree. And for something that is so unnatural, it's hard to believe that there are no other firms/props trying to do the same. It will be extremely helpful if you can explain how this shop could have made money by simply getting the contract mechanics of a TAS, aka trade at settlement, listeners, in combination with the future in WTI right. Does not look like there was any quantitative, intense math going on here. He puts in parentheses, with no disrespect to this group. Well, I'm sure none was taken. It sounds like they simply understood the relationship between the contract types and were brave enough to take the size. I'm not sure if we have the link to the article here for you, Dan. But it's an interesting thing. First off, if you're pretty familiar, maybe we should start there. Maybe we should explain to some of our listeners trade at settlement and exactly what those kind of orders are. And then B, if you have anything you want to add here, Dan, on this particular issue he's talking about with Bloomberg and this firm Vega making some size profits using TAS orders in WTI back in April. Have at it, sir.
Well, I think what's interesting for any market is what is the final settlement price and how is it calculated. One thing about crude oil, if we were talking about lumber or something like that, then it's a whole different kind of animal to me. Crude oil is an incredibly deep product, and it could be just as simple as our listener here was thinking. Was it Rhythmic
Angel? Yes, interesting handle.
Yeah, it is an interesting handle, but it may be just the simple fact that they are willing to take that risk as they go into that close to take a position, and the issue would have to be here, and from a regulator point of view, would be, was the public harmed? That's the guiding light for our regulators, right? That's their job. They try to make sure not to say, well, it's a good business decision. They don't regulate whether it's a good idea or a bad idea to buy or sell something. But they do regulate or try to monitor what is fair. And was anyone hurt? Was the general public hurt by that action? If they were, then you probably have manipulation and you have something for them to look into. Is this something that the market absorbed and we can't find who got hurt? Who got hurt by this trade? And if it would have hurt us trying to trade that market, well, then it's manipulation. And I think that's the issue here is who's hurt? And did it make a market unfair by having that kind of action? And that was a sizable trade. But when you look at my path crosses a few institutions around the globe, and, sizable trades, we just don't hear about them, but they occur out there. And things in this area, and FX, it doesn't matter. There are a few banks my path crosses that would be in that size of trade. It wouldn't be necessarily unusual. But anyways, that's my point.
Especially I'm sorry, go ahead, finish up.
No, I was just going to say is it manipulation? If to manipulate something, then you have to show who was hurt. And then the regulator has something to lean against. I don't know if you could really show that here. But that's what I was thinking, Mark.
Yeah, this article actually came out from August of last year. So it's a little older article. And obviously, it's referring to the April sell-off of last year, which is when it's a pretty small firm out of London. Most people had never really heard of it before they made this outsized profits. And it was kind of an aberrant day. Obviously, we saw that massive swing to the negative out there in WTI, something that was unprecedented. So was there shady business, or was it just complete stroke of mad luck out there? It could be, who knows? It could be a little bit in between. A day like that where things are so unprecedented, I wouldn't put it out and put the notion of just blind luck as well. I mean, these guys could have gotten seriously lucky. Otherwise, they're not size players in this market. This is kind of a trade they do a lot, and usually they make their small profits and they call it a day. It just happened to be this one day where things settled just extraordinarily different that seemed to work out for them. I know CFTC and others had announced investigations in this. This was as of August of last year. I don't know if there are any results of that. I know CFTC did publish a report on the entire events of April of last year. Obviously, I don't see anything in particular about this Vega firm and whether or not, looks like, I think the CFTC report didn't really blame these Vega guys. So it looks like they ended up, they made their money. It looks like they're going to keep it here, at least as far as I can see here, Rhythmic Angels. This is an interesting question. And let's see. Vega, I'm just looking here. I'm trying to look at their CFTC reports, which make for exciting reading, listeners. The CFTC also investigating some of the mechanisms behind a trade at settlement, but they didn't go ahead and actually point a finger at anyone and say, you actually manipulated anything out here. So you're right. This is an interesting question. It is kind of open to interpretation, whether they were banging it or whether it really just worked out in their favor. It could have very easily have been the latter here. I need to dig a little bit farther to see if I see any other findings, but it sounds like the regulators came down that way as well. A Rhythmic Angel out here. So I know it's easy to put on the tinfoil hat and say something shady was afoot, and it certainly could have been. It just, the way things moved that day, a lot of people got caught flat-footed, and some people won the lottery, and it sounds like maybe Vega was in that latter category. All right, everybody. Unfortunately, that music means we've come to the end of a very interesting journey. Dan, we went to a lot of places today. We hung out a lot in ags because they merited it. I hope all the ag heads are happy out there. You're always asking for more ags. So we hung out quite a bit in ags, touched on some equities, touched on a little bit of WTI with all this whole trade at settlement fun. Probably more to dig in there as well as some of our thoughts on the whole commodity ETP landscape, which we could probably do 10 shows just on that. So if you have questions or comments, keep them coming. And Dan, excellent job holding down multiple hot seats today. If folks are intrigued, they want to reach out to you, check out some of your videos in between episodes of the show, where should they go? What should they do, sir? Just
DanGramza.com. It's a free daily video. Every day the market's trading. There, I put out commentary on what I see happening in 22 different markets, and it's the intent. You'll see red and green lines, which represent a buy or sell level for me. I'm not suggesting that anyone can do that, though. It's just the idea is to share how I'm looking at these markets. And if you've never traded futures, one place to begin is just watch them. And this may be a way to look at them. Or if you only trade equities, there are some other markets you may want to take a look at. And one of the places to begin is just follow them. And so there's 6 different sectors: stock indexes, currencies, interest rates, metals, energy, and ags. So that's the intent behind that. And hopefully it gives someone a degree of comfort of how these derivative markets do operate.
Lots of comfort to be found there. Dan GRAMZA, GRAMZA. Check him out. He does great videos. I've seen them myself. And you heard him on the show. He could talk about a lot of different products and cram a lot of living into those short videos. So check him out in between episodes of this program. You know where to go for all the info we were talking about earlier, all things going on in the land of FTSE Russell. They have the links to their webinars they've just done. They're just coming hot off the heels of their big recon. How did that perform? How is that impacting volatility? They have a lot of that data over there as well. FTSE Russell, FTSERussell.com is the place to go. Give them a follow on the old Twitter as well, at FTSE Russell. No spaces or anything, all one word over there. And of course, you know where to go to check out the reports for this show and everything else cooking over there. CMEgroup.com/TWIFO or /TWIO. Both of them will get you where you need to go. And on behalf of everybody over there in CME land, everybody in FTSE land, and Mr. Dan, and of course myself, I thank all of you out there for downloading, streaming, and subscribing, for listening live. We love you all out there. And of course, we're back again tomorrow. Volatility Views, noon Central. And then right after that, well, an hour after that, really, we're coming back at you for all of our pro members with Options Oddities. Then we're off on Monday. Don't blame us. It's the holiday here. And we're back again on Tuesday for another great pro Q&A all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.